Well, that's KC International, but we have Gurmeet Chadha who's joining in now to talk about all of these stocks and more. Gurmeet, where do I start? There's so many stocks to talk about. But first on my list is Tata Motors because of the resignation of the JLR CEO at a time when the business is undergoing challenges. What would you do if you were a Tata Motors stock owner?
Hi, Sonia. I think we should just wait for a while and see, maybe probably get to how the leadership succession happens. We've seen that in past in Eicher, Ashok Leyland, and some companies. Typically, top level exit can lead to some changes. I think, but if you look at the operating performance, especially Q2, the JLR EBITDA margin was a surprise. It was almost at 10%. I was also looking at, because that's still the largest portion for Tata Motors. And if you look at the mix of the products, which is RR Sport, Defender, that seems to be improving. And they've also guided for higher units this year, almost 160,000 units. Also promising reversal of this, net working capital, which has gone up. The India business obviously saw some margin contraction, but continues to do well on new launches. We have a Tiago EV also launched, which should add to the numbers. So overall, in a watch list for us, remains a portfolio stock for us. Would wait for, because these high level exits you can't preempt and say what's going to happen. So better to wait for now.
Gurmeet, good morning, Prashant here. As a food connoisseur, I think you're exactly the right person to ask about Bikaji. I don't know if they have chola bhatura on their menu, but how things. I don't know if you've looked at it as a business. Decent listing yesterday. Any thoughts?
Prashant, slightly richly priced, but this segment would have a slightly higher premium. So 4 or 5 categories they operate in, which is bhujia, namkeen, sweets, and some of the Western products as well. So slightly expensive on the valuation front, but something of this sort. So Tata Consumer, for example, is related, but this is slightly different in this. If you want to call it as a ready-to-eat segment and fast-moving, food goods in particular. Our portfolio stock continues to be, Tata Consumer there, which I think has multiple levers of growth, not only in the salt and the coffee and the tea segment, but also in Sampann and the ready-to-eat segments they are getting into, breakfast cereals, snacking, etc. Starbucks venture possibly turning around this year. So there are multiple levers there, and the stock also has consolidated. It's actually down almost 15% from the peak.
Okay, hi Gurmeet, good morning. What about Paytm? Now some of those locked up shares are going to be hitting the market. Stock IPO came at around 2,100. Now the block deal is likely to have, say, in that vicinity of around 550 to 600 rupees. If you wanted supply, there's unlimited supply. But are you interested?
Not really, Nigel. Fortunately, have stayed away from most of these. There are few, so I would not like to club everything at one. Because the environment right now is that you have a 7.5% on the 5-year and the 10-year government bond, right? So the discount rate is up. So anything not profitable, anything where there is no glide path to profitability, I think is best avoided in an environment like this. Maybe at some point of time, there will be like in Zomato, for example, at some price point, it became attractive from a tactical call perspective. But this is not a market to, so price correction doesn't necessarily mean a value buy.
Okay. I wanted your thoughts also on a couple of these stocks like Exide. There was a detailed roadmap given on their lithium-ion manufacturing foray. And, they're getting a very positive response on their new batteries. They're supplying in a big way to the electric vehicle space. The stock is up 30% in the last 6 months, but do you think there's more to go?
Not really, Sonia. I mean, as I said, we are not really looking at transformation and how the new launches are going to play out. In this market, you look at, when you do financial modeling, you want to clearly be more certain about what your cash flows and, profits would be. So, for example, what we buy in this space is Minda. We have done a 2-year, let's say, financial plan for them. So we see the PAT going up 3x the next years, 2.5 years. So we want to be more certain on what we are buying right now. In this, end of the day, you have more responsibility when you manage public money. So lesser risk, better reward. I think that's the play we are trying to do in anything which we are buying right now.
Gurmeet, what about the pockets which are seeing continued momentum? I don't know. I mean, these rail infra stocks, etc. I don't know if they're portfolio stocks, but if they continue to do very well, they will, right, come into that category because they'll have a record of steady performance, etc. They don't have that yet. but stocks are up 25, 30, 35%. And the other is names like HAL, Bharat Dynamics, the defense names. Your thoughts?
So defense names we continue to like, Prashant. Have discussed solar industries, multiple times with you. HL also, if we also track their, such as somebody was pointing out earlier in the show, the order execution, year-wise is very important because these are long gestation projects. So HL we track, the order execution on next 2 years, 3 years, 5 years in terms of Sukhoi, in terms of lightweight helicopters, etc. Despite the run-up in the stock, I think that looks pretty good because that's very important from a working capital point of view. And I think defense remains a very, very promising play. So we like HAL and solar industries. Solar industries continues to be a portfolio stock for us. I was very impressed with what they did in the Defense Expo recently in Delhi. The kind of products they have in the pipeline they have, not only just in ammunition or surveillance system, but also on drones, is very, very impressive. So it looks a very promising play. Also some defense, ancillaries, smaller ones.
Okay, Gurmeet, what about, the sugar stocks? You've told us about the chole bhature, you've told us about, this Bikaji we've discussed. But is it sweet enough for you? Balrampur Chini, they keep saying that they shouldn't focus them as a sugar company because that distillery commissioning as well is taking place. There's a bit of a tailwind for sugar stocks on the whole. Would you look at them or it's too cyclical, you want to stay away?
Yeah, too cyclical, like metal stocks. So Nigel, the better way is obviously the ethanol story, right? Where there is a clear blending target by the government. You have an order book with Paraj, which is visible till 2025. They're working on waste management in terms of the other products they're working on. The diesel blending works, still not started. There's some work happening there. Then there is compressed biogas they are working on. So on clean energy, on something which is more sustainable and long-term in energy, I think ethanol looks a better play. And we are invested in Paraj Industries in our portfolio for quite some time now.
Okay, all this talk about chole bhature getting me hungry now, but we're going to take you up on that one. We need to take a short commercial break now, but on the other side of the break, Gurmeet, stay on. We'll come back to you in a bit. Sudarshan Sukhani and Nitesh Thakkar will also be with us to talk about some technical trades. Stay tuned.